Hey everybody, Jeffrey Beamer here, Senior Market Technician for Elliott Wave Trading. Hopefully you guys, everyone had a great weekend. We are back at trading here on a Monday. We're looking today at lots of things that are upcoming. Let's start right away with our trade from last week. Believe it or not, it's still open. We extended this trade out to where it would cover through today. It expires actually this Friday. The trade was on Lenar, and what we were doing was selling premium going into earnings. And as you can see from the chart on the left-hand side there, earnings and then the big candle. But the nice thing about how we structured the trade is that our break-evens were well above and well below. In fact, our downside break-even in the trade was 148.70. And currently, today, at the time that this snapshot was taken, the stock was trading at 155.92, so well above our lower break even. Now we are up nicely in the trade, about 96 basis points to portfolio. That's the number that you see under profit. We base this on a $10,000 trading account. And so what we'll do is we'll wait. Probably by the end of the day, this will be above $100, and that would be 100 basis points or 1% on portfolio, and that's when we'll take this trade off. All right, so a nice successful trade on Lenar, and we're still in earnings season. We'll talk about that in a minute. But first, let's get to some of the headlines because it's an interesting day and an interesting week for a couple of reasons. So we start right off with markets bouncing back after trading and closing lower for the week last week, which is kind of rare these days for the market to have a losing week. We opened up today up gapping higher and moving higher. And what's helped the market overall was our second headline, which is Apple is reportedly in active negotiations with Alphabet to license Google's Gemini, their AI powered features in iPhone. Now, this is good for both companies. It's interesting that it's an acknowledgement by Apple saying our AI is not very good, and that Google saying, hey, our AI is good enough to be across many different platforms. All right, so both stocks reacted, and they were up on the day. They're off their highs, but a nice move for both stocks here on a Monday. Now, despite the rally, and this is our next headline, the market is really eyeing FedSpeak this week. Now, the interesting thing here is that there's more and more opinions, and if you listen to the talking heads on the business news channels, they're all coming more towards what I've been saying since January, and that is there's going to be very few rate cuts this year, and the first one would probably be June, and I think it'll be a gratuitous 25 basis points. There may be one more beyond that, but there's certain things underneath the covers here of this economy that are really concerning, not being discussed, not being talked about openly on the news media. So we'll bring those up from time to time. But the bottom line is market's still rallying here, and that's good for investors and traders to have a defined trend. And our last headline here is that earnings, we're on the backside of earnings season, although we still do have over 500 companies declaring earnings this week. All right. And so this is perfect for our strategy as we do delta neutral type of focus. And we're going to do something a little different this week than what we did like with Lenar in the past several weeks. So let's jump over to the charts and let's take a look at this market because it is rallying nicely. We're up about 79 basis points. Well, we are up 79 basis points on the Spider Index Trust. We are off those highs, but just this beautiful defined uptrend. Now, we have been chopping around here around this 515 level. We're getting more and more price action here. One thing that I like to do is look at Heikin-Ashi candles. And today, after that red candle that did raise some eyebrows on as we closed out the week last week, we do have a nice green candle. And really the trend continues. And, just by using the data on this page right here, or on the, you can see that we're in this nice upward sloping trend. And then this horizontal line that I have, if I add more data, and let me go back to my regular candles, all right, if I bring in more data here, you're going to see that this is off of this previous major pivot back here. And the reason I leave these on is really as targets. It's amazing how often they come into play. Now, I have not measured out, maybe for next week, what I'll do is measure out this rally that we've had and the pullback that could come. And this would be our target around this 475, 478 level would be excellent support, since that came off of that major pivot back in 2022. All right, actually January of 2022. So that's where we're looking at the S&P 500. Now, looking over at the Nasdaq and using the Qs as our proxy for the Nasdaq, we are still in the uptrend. Okay, we did pop out of it last week, but we're right back up and in it and above my support here. Okay, we did break support last on Friday, but now we've popped back in, and you would expect then my hike in the sheet candles to kind of go green once again as we pop back up here. Let's take a look at those, because I think we're going to have a very small candle. We do. All right, as we look in here, it is green. We have popped back up, but we'll see. What's interesting as I look at this chart is that we do have a little bit of these tops here and forming this little wedge. So we'll keep an eye on the Nasdaq, as it looks like it's getting a little weak. All right. Now, speaking of weak, we have the small caps, the Russell. They are beginning to feel the pressure of a heavy market and higher interest rates. They did break down last week. Friday, they really hung on. It was not looking good as the market opened on Friday for small caps, but they did rally, and they did hold this current level up above 200. But today it's already down 14 basis points, and we're looking to possibly move lower. So we're going to definitely keep track of the small caps, as really, if we break down below 200, I think our target would be 190, a good $10 pullback back down to support here at 190, if we do follow through on that move. Let me put some moving averages on. We have dropped below my 21 period moving average. All right, and this is the 161 moving average, 161 period moving average on this gold down here, all the way down currently at 187. So we'll be keeping an eye on that. Now, as we move over to take a look at oil, oil is breaking out. USO, boy, having a nice day today, up over 2% on a big move as energy prices continue to rise. We have gasoline refining more expensive. We have production not meeting demand. Demand remains heavy. That's the main thing, is demand. And that is why we broke out above that $75 level, and now we are racing higher. Now, what's interesting is this is taking on somewhat of what we call a vertical move here. Okay, and when stocks go vertical, or ETFs even, they don't last long, and they will pull back at some point, as you'll see here in just a moment. In fact, why don't we take a look at that right now on gold? Okay, so if we jump over to gold, gold had this grand rally, okay, up over 7%, but then all of a sudden paused. Last week, it took a breather, has pulled back, hovering right at this $200 level. Now, of course, this does bring up this nice little chart pattern here, this tiny little wedge, okay, as we define that, and we will look for a breakout. Now, typically, on this type of pattern, we would see a breakout higher, but there is a failure rate to this pattern, which means it could trade lower. But on this vertical move, we often do see pullbacks. And right now, we're not getting a huge one, but we are getting this pause on gold. So I would look and see where, set some targets a little higher. Let's look at Heiken SE. They are turning red. That is somewhat concerning as we watch the metals here. But we'll keep an eye on gold and see if this rally can continue. Now, the same thing with silver. It's lower today, but did have that big 2-week rally, and it's still in this big uptrend. Okay. Now, interesting. Friday's candle is somewhat bearish, so I'm not surprised that we're pulling back today. Now, if we get any follow through, that'll be the real question. Now, we are up against some significant resistance up here. If I pull in more data here, you can see touching some tops here. We just came right up and we're kissing this level of 23, around 2310. And then there's another area of resistance just above that, probably up here around 23.5 or so. So we are up in some area of resistance on silver. But again, that is a pretty interesting trade, a breakout above this, this level here, and we're going to run higher. Okay. If not, we could see a pullback probably down to at least 22, a little over $1. That's a good enough distance for a good option trade. All right. If you are trading options, you could put all sorts of things down there, a calendar spread or a butterfly or something down there, and that would probably be pretty inexpensive to do that. So let's move over to bonds. Taking a look at, that's where the action really has been. And look at this, the long end of the curve, the iShares 20-year Treasury bond ETF TLT. It's trading down now to support, and this is pushing rates higher. Bonds down, rates high. Okay, bonds up, rates down. Okay, they have that opposite effect. So interest rates are being pushed higher today in anticipation, really, of the next FedSpeak, which is this Wednesday, right? And here's the concerning thing: if we do break this support level between $90 and $92, folks, it's a long way down. Okay, and we have been down there recently, as recent as November. Okay, and that means much higher rates potentially. Okay, so yes, just trading down to support, and now rates are higher. Now the short end of the curve, which is SHY, is doing the same thing. Okay, dropping just as fast or faster. All right, this is a key area here. 8140 is key support as short-term rates also creep higher. Now, really, the speed of these is interesting. So the whole interest rate, whole bond complex is negative, meaning rates are creeping up and up and up. Okay, higher interest rates, higher interest rates. But the fact that they're both going up and they're both going up at the same rate is very concerning, and we will see. In fact, on our next image, that inverted yield curve that we look at right now, the 3-month, we did get some a slight easing on Friday, but I think today this will drop back down. We were at 1.37 to the negative last week. Today, it's Friday, we were at negative 1.17. So that is a slight flattening of the yield curve, which is good, but we're still over 100 basis points negative. And that is just not healthy for the market. It's not healthy for the bonds. It's not healthy for the equities. It's not happy. It's not a good thing for the economy. All right. So, in fact, lastly, when it comes to the bond market, let's take a look at interest rates. Interesting dynamic occurring here where the average 30-year is trading back above 7%, but that is a daily number. Okay, the blue line that you see here, the gray number, the Freddie Mac weekly survey, and the Mortgage Bankers Association, which is the gold, is also a weekly survey. Those are lagging. Okay, so we can see those popping back up on the next report. Okay, the blue line is a daily report. So as you can see today, it's back up above about 7.1% for the average 30-year mortgage. Still not too bad, but I know some people were getting rates down in the sixes, and I even heard of some in the fives. But this may change with interest rates continuing to rise, continuing to rise, continuing to rise. All right, so let's bring it back to stocks and kind of talk about where we are with earnings. As I mentioned before, we're on the backside of earnings season. We have still 500 companies declaring this week. And then the numbers really drop. And we'll have between 50 and 100 stocks or companies per week declaring earnings until mid-April, when we get ramped back up again. Okay, so we, believe it or not, earnings season it's lasted since the second week of January, okay, to the end of March. And then the same thing is going to happen. It's going to go from the middle of April to the end of May, literally. If not, maybe early June will be the next cycle. So what you're looking at now is this week, just some of the key names. This is not all the stocks declaring, but this is some of the key names, notable names, and those with high option volume or open interest. And so really there's not a lot of big market moving names here. I mean, we do have General Mills and just a couple of others on Wednesday, Steelcase, but Wednesday's the big day. I guess KB Home, another home builder. You know, we had Lenar, now KB is up this week. And KB being a home builder and Micron being a semiconductor, those are Wednesday after market close. So Wednesday's going to be a big day. We have the Fed announcement Wednesday afternoon. And then after market close, we do have Micron and KB Home and a couple of others. And then Thursday, we have jobless claims. And, you know, we do have some retail names and some manufacturing names, you know, Academy, Darden Restaurants, Winnebago, obviously the RV maker. And then after market close, we have Nike and FedEx all coming up on Thursday after market close. So out of the stocks that we are watching here, we actually are going to take a look at a stock that's not in this list, and that is our trade of the week this week. So what we're going to focus on is a case study on a company called The Children's Place. Okay, PLCE is the symbol. PLCE is the symbol for the Children's Place. And this is a stock that's really been taking it on the chin. This is a inexpensive stock. It's trading at $13, and we're doing a straddle on this. So what we're anticipating for this week is a breakout. So for the past several weeks, I think about 4 weeks, we have done stocks that don't move very much. Okay, and we're making this consistent about 100 basis points a week to portfolio on portfolio, and we do more than just one a week. We do several of these a week, and that just creates this great return. Well, every now and then we'll do a breakout where we're anticipating a big move, and typically this moves over 20 percentage points. And what we're expecting is kind of the same thing to happen, a move over 20% to happen to the Children's Place, which could put it outside of either one of the break evens. We just want it to move. All right, so a straddle on the Children's Place. That is our case study of the week here, looking at this delta neutral trade for the week of March 18th. So hope you enjoyed today's session. Have a good trading week, and we'll come to you again live next week. Take care.